everyone, and good to see you again. Today's edition of Money Moves. Today, Uncle Charlie here will be taking you through the baby steps of taxation. As they say in GH, every CD count. And I've added it, and so does every time. And one of the key things for us is to make sure, and I repeat, make sure that we are planning our tax obligation, because your tax obligation, or tax as they say, is as constant as death, but the planning keeps you alive. So we'll walk you through the baby steps. Now, the minimum tax rate for everyone registered as a company or individual is 25%. Sometimes some of the companies itself are all 25%, except that those in specialized, like the banks, like insurance companies, they have a separate rate, but that's not the reason why we're here. So the corporate tax rate for limited liability companies, including individuals, is all 25%. So once the company have defined the profit, the taxman will charge 25%. So that's it. Income tax 25%. Your strength is to keep records. Your strength is to track records. Your strength is to ensure that you have invoices for every item. Usually we ignore things that maybe you pay as an SME I'm referring to. You dip your hand into your pocket, you can't separate it whether it's for pay or personal expense or not. But for the purposes of taxation, we must separate it, and therefore I'm encouraged by this study to tell you that you have to keep records. Now, another form of the tax is what I refer to as PAYE, pay as you earn. And you know how the PAYE works? As long as you have workers, including yourself, you are a worker. Because I'm separating you from the company. When you pay yourself, you deduct taxes from it. They call it PAYE. It's a build-up, so it's in stages. So it starts from a first amount is 0, and next one is 5% and all those. So those ones is fairly easy. Once you are registered, you go to the GRA offices and you're going to pay yourself whatever amount is. They will guide you. And if you inbox me, I'll guide you too for free. That's PAYE. Another important layer, if you've registered your business and the type of business you are in, another important layer is what I call the VAT. The VAT here is that once you have, on an annual basis, you are doing sales of 500,000 cedis, 500,000 cedis, then you have to register. You have to register. It benefits you. So the VAT computation is 1, 15% VAT, NHIA 2.5%, Get Fund 2.5%, and then COVID 1%. So because they are levies, you usually would add it to the amount before you slam the VAT on it. So that's the third one. The fourth one is withholding taxes. Now, the withholding taxes these days has become a very major thing. Unless the person you are supplying it to, you are providing a service for, have exemption from GRA, you are asked to deduct the tax on behalf of GRA. So is you. When you supply somebody, you're going to collect your money. You notice that they've deducted withholding tax from it. What it is in a real terms is that you have advance paid your taxes. So you have prepaid your taxes. So that withholding tax that the person deducted from your amount, you've already paid your taxes on account. So year end, when you do the sums and you are supposed to pay taxes, they say, hold on. You deduct with all the withholding taxes that people have deducted on your behalf. And then you pay the net if any. If you don't have anything, you carry over. In the same vein, when you are paying somebody, you have to deduct it and pay to GRA. Now the GRA, the rate varies. The first rate really, it's what I call fees, emolument. So when you are paying directors in your company or you are paying any services, you have to deduct 20%, and it's on account. And then when you're paying rent, when you're paying rent for your workers and all those, you have to deduct some 8% to 8% on that. Then there's the supply of goods. If the supply of the goods exceeds 2,000 cedis, maybe you send your thing to mechanic or any other thing, and it's charged you, and it's above 2,000 cedis, you have to deduct the withholding tax. So, because if you don't deduct, they would worry you. So maybe they bought this, they bought that onto the car, and you are about to pay. Deduct 3%, and then you pay the 97% to them, and then the 3% a month, and you pay to GRA. You collect the receipt and you give it to them. The purpose it serves is that you are telling them that I have deducted, I have paid, this is your receipt. So tomorrow, if GRA goes to that mechanic, they already have a receipt and they've done their work. Finito. Nobody has any problem at all on that. Like I said, once you register the business, you go and register with the GRA offices. You'll be given the TIN number, which is the tax identification number, and then it gives you opportunity to file year end and also keep records. Till I catch up with you at my next episode, money moves. See ya.